Hi, I'm Ross Mayfield, investment strategy analyst at Baird, and we are back for another weekly video with our friends at Strategas. Today, I'm thrilled to be joined by Washington research analyst Courtney Rosenberger to go through the policy outlook as we head into year end. Courtney, let's start high level. There's a lot of outlooks floating around. It's year end, so it's that time. What are you all watching high level over the next couple of months as we finish up 2021 and head into 2022?
Yeah, it's interesting because essentially since late summer, we've basically been saying that it was the September to remember, the fall to remember, the December to remember, because there's just so much stuff going on and there was so much chaos. But congressional lawmakers got a lot of stuff off of their plate in the last 5 weeks or so. We had the debt ceiling taken care of, we had government funding taken care of, they passed the bipartisan infrastructure bill, but we still have a lot of things left. The big one is obviously Build Back Better. The date on that has continuously shifted, now looking like the earliest that we'll probably see passage from there, probably third week of January, but it could be even later. But there's a lot of other stuff besides Build Back Better. We have Fed confirmations, Chair Powell and Vice Chair Brainerd's nominations need to be dealt with, as well as the rest of the FOMC slate. And then we also have the State of the Union. That's going to be towards the end of January. Government funding expires February 18th, so we can look forward to another fight on funding the government and the length of time that they're going to fund the government for. And then there's just going to be additional legislation that we're going to see. Certainly, it's hard to get legislation passed with the current makeup of Congress. And then there's kind of the midterm election year hanging over everyone's heads. But we could still see kind of targeted legislation. Something that we might be watching for is an extension of the more generous child tax credit, especially if they can't get Build Back Better passed.
Well, and you mentioned it's a very difficult environment to get legislation passed. It's very tight in both the House and the Senate. So let's just talk about Build Back Better. I think, earlier in the summer there was probably an expectation that this would be passed by year end for sure. Now it's looking more like January, maybe even March. Could you talk through what your expected timeline is and maybe what the one or two big hangups are that folks should be watching for?
Yeah, it's interesting. I was checking the predicted betting markets this morning, and 3 weeks ago, there was a 75% chance this bill would get done by December 23rd. So a week from when we're recording this, and it's currently at a 2% chance. So certainly expectations have shifted there. So yeah, we're looking at kind of January at the earliest, but depending on Senator Manchin and what he wants to see from QE, that could lead into a March timeframe. Our base case, though, is that this still gets done. I think that, markets and investors have kind of dowered on the prospects of Build Back Better. We've seen that kind of in how stocks levered to Build Back Better have performed recently. But Senator Manchin doesn't want to, not let President Biden's, legislative achievement pass. We still see that Democrats want to get to an agreement here, but there are a number of problems. Senator Manchin is one. He's concerned about inflation. He also has concerns about doing short-term funding for programs that are likely to get extended and using permanent tax increases to fund those programs. So things like the child tax credit, only funded for 1 year and Build Back Better. He wants to see that funded for 10 years. And certainly that creates a problem with the size of the package and funding mechanisms. But there's non-Manchin problems here as well. The parliamentarian still hasn't finished her review of the provisions to make sure that they adhere to the rules of reconciliation. That's taking much longer than anticipated. And then there's disagreements over provisions that have nothing to do with Senator Manchin as well, like the state and local tax deduction, where progressive and more moderate Democrats haven't agreed on a number for that either. So there's a lot of things that still have to be worked out. Again, we're still anticipating that this gets passed, but that timing does increasingly look like it's shifting towards January. And that has some, repercussions for things like retroactive tax changes, the child tax credit, like we already discussed, the last payment for that being December 15th and potentially not having a January 15th payment. Certainly a lot to watch for.
Yeah, absolutely. Never a shortage of items to watch. And you're making my job easy because you keep setting up the next question. So you mentioned QE, you mentioned the Fed. Yesterday, as we're recording this, was the FOMC meeting where they took a decidedly hawkish tone. They want to battle inflation. They see a healed or healing labor market. And so they want to get more aggressive with tapering their asset purchases and probably pulling rate hikes forward into next year. How does that factor into all of this equation?
Yeah, so we We could see that, what Powell announced might be enough for Senator Manchin. Maybe the announcement of taper is enough for him to say, I'll be ready to go in January. But tapering is next anticipated, even with Powell's accelerated schedule, to be done until the end of March. And that's kind of where you get that March timeline where this could come into play. You're looking at polling that consistently cites that voters are concerned about inflation. They're saying that inflation and things like higher gas prices are have bigger causes or a bigger reason for a poor economy than unemployment. So that's where Senator Manchin is really getting his concern about inflation from. But there's a lot to watch for with the Fed, kind of aside from the taper. We're looking for the confirmation hearings. We're looking for who the next nominees are going to be for the rest of the open FOMC seats. Don't have those as of recording, could have those in the next day or two, according to Senate Finance Chair Brown. But who's put in control of something like Vice Chair for Supervision, which regulates the banks, that's going to have really big ramifications for investors, particularly in terms of what could change in reviews of things like climate stress tests and other regulations. Overall, we are anticipating that those who are nominated are going to be a little bit more dovish. That's important just because we have some hawkish members rolling onto the FOMC for 2022 voting, but we anticipate a more dovish tone from those who Biden nominates, and especially because they have to get the entire slate confirmed by the Senate.
Well, the January to remember or the March to remember don't have quite the same ring to it, but I have no doubt you all will come up with something by then, and hopefully we'll be able to chat again before then because there's never a shortage of things to talk about out of Washington. So, Courtney, thanks so much for the time. If we don't speak again, have a great holidays, and look forward to chatting again next year.
Thank you, you too.